I am so excited to be here to introduce our next session, which is a fireside chat between Eric Glyman, moderated by Yoonkee Sull. Eric Glyman is the co-founder and CEO of Ramp, a finance automation platform designed to help companies save time and money. I've had the honor of being an investor and customer of Ramp for the last 2 years, and I've watched them grow like crazy. That might sound like a long time, but it is, trust me, for Ramp. Today, Ramp is the fastest growing corporate card and bill payment software in America. Prior to Ramp, Eric co-founded Paribus, a price tracking app to help consumers save money on their everyday online purchases. Born and raised in Las Vegas, he's seen a lot of uncontrolled spend. Eric now lives in New York City, where he is an active angel investor. Yoonkee is a general partner at ICONIQ, a leading venture capital firm that partners with founders from early growth to IPO and beyond, including Ramp. He has been at the firm for nearly a decade and has led a number of investments across fintech, software, and consumer internet. He also leads the team based out of New York City here. And so I am so excited to welcome Eric and Yoonkee.
Great to see everybody, and thanks so much for coming in.
These seats are a little cozy. We're kind of close together.
I know, cozy.
Well, thank you, first of all, Primary, for having us. It's a real honor, and this is an incredible. We've been here multiple years, and it's just been an incredible showing and conference today. So we're really excited about this. Just given that we are at the New York City Summit, I figured it might be appropriate to start with. Tell us a little bit about why you decided to build in New York City and why you're bullish on the ecosystem here.
Awesome. Super happy to do it. And look, I've never seen a New York City Summit that's so full. It's so busy, and the hallways around this room is filled more than I've ever seen. And so this feels like a good time to be talking about the city of New York and, frankly, the startup ecosystem. Look, I think this is a city that's time it's come. This has always been the financial capital of the world. This has been one of the centers of great marketing, of great design, of creative works that touch and move the world. And this is a city that, especially over the past decade, has also become a home to great companies and great technologists. When I look over the past 10 years, you've seen extraordinary companies built, like iconic portfolio company Datadog, an extraordinarily publicly traded company, MongoDB. The direct-to-consumer movement all was centered here, combined with, look, I think you had extraordinary engineering, product, design offices for the large tech companies, for Amazon, for Google, for Stripe in payments, all kind of moved. And so I really felt that as we were considering and getting ready to start Ramp, it felt like this density of talent and people who knew what it was like to build a company was here. It was just time, frankly, I think, for an extraordinary engineering, product, design-driven company to call New York home as well. And so, look, I feel super grateful to be here. I think this is an extraordinary community that's never been stronger.
Amazing. I also moved out from San Francisco in 2019 to start building out our team here, and I think it's just been wonderful. And I think in that time we've had the opportunity to partner together. I'm sure we're going to talk about Ramp, if not already, as part of that list in the future. Maybe shifting gears to a topic I'm sure that's been on the top of mind for a lot of companies, investors, is the fundraising environment. It's been very challenging over the last couple of years. We've seen a lot of headlines around structured financings. We've seen a lot of headlines around companies needing to look for alternatives. There's been some negative press on the concept of down rounds, which I don't necessarily believe is a bad thing for all companies and situations. Putting all that together, you've just had a successful financing recently, and I think it's been particularly notable in terms of how you decided to approach it. You were upfront about the realities of the market. You were also doing it from a place of incredible strength, just given how well capitalized the company was. And so, I'd love for you to share a little bit around, how you thought about going about it, your philosophies around it, and just kind of what came together.
Yeah, happy to speak to it too. And I hope this is useful. I know that for almost everyone in this room, whether you're a founder, whether you're an investor, I think the question of, as the world has gone from, look, when we did our last financing in December of 2021, the risk-free rate was 5 basis points. To when we did the last financing announced last month, the risk-free rate was about 5.5%, so several orders of magnitude change. How does one go about continuing to invest in companies that create value not just over months and years, but over decades? I think is the question on the top of mind for everyone. For us at Ramp, our mission is, we believe our purpose is to help our customers, whether it's small businesses to late-stage publicly traded companies, whether it's Shopify, Eventbrite, you name it, spend less money and time. That is our purpose, and that is our goal. This is a moment we felt that, first in our own business, we were growing rapidly. Between financings, we grew transaction volume by over 6 times in an 18-month period. We were efficient with capital. We had the majority of capital on balance sheet. And in many senses, there was no explicit reason for why we needed to bring on new capital. That was like the first part of it. When we looked at the customer experience and we were talking to customers, we were investing a lot. We felt that other competitors, other companies out there were investing less in the experience. Prices were going up, customer experiences were deteriorating. It felt like there was less being put out there. And it felt like, first, for our customers, a special moment to be leaning in, to be investing in delivering more savings of money and time year in and year out, a faster pace of innovation, and reaching more businesses. And so we first felt like this was a special moment, first to be investing in customers. Next, I think SVB was an interesting reminder of the dangers of not marking to market. Very different circumstances, to be sure. But I think someone had said, look, whether or not you step on a scale within 2 years, doesn't mean your weight was whatever it was a year or two ago. We think there's something very powerful, especially around understanding where in the context of the reality is the business today. That's helpful because as you're hiring new folks, being able to say, first, here's where the value is today in the context of summer of 2023, here's how we look at this. I think it's also valuable for employees, people at Ramp who've been working for years, to be able to know, not just you built some extraordinary, but if you want to sell, if you want to create some liquidity, it's real, you can do that today. So there were some strong motivations on that. And as we kind of bring it all together, we sort of looked at the reality of there was extraordinary investors like your team, and others who believed in the mission of what we were doing. We are trying to optimize one thing, the long-term enterprise value. We think we do that by delivering extraordinary customer experience to more customers, bringing in more employees, and this felt like a special moment to align everyone together on the same page. So the way we approached it was very simple. We tested the market. We said, look, we don't know if we want to raise capital or not, but we want to know, how do you think about the value of this business? And what also would, in your view, be, create more value for customers, for the business? How do you think about it? We knew where things were, and we said, let's do it. We decided to price everything the same, identically, common, preferred, all of it at the same. We think that's super important, just as we try to align incentives between Ramp and customers. We exist to help them spend less. If we help them spend less, we do better. We want all shareholders to be on the same footing, and so we did not do what many other companies do out there, which is structured financing to create some kind of valuation that isn't real, and misalignments within. And I think post-completion of all of it, I have to say, look, we feel extraordinary. Like we've never had more capital on the balance sheet. We've never been in a position to invest so much in the experience of our customers. We're excited. I think it's something that different folks have used some fears on, and I would say I think it's really worth considering, and we've been in a stronger spot for doing it.
No, it's an incredible milestone, and I think to your point, having the extra capital in this market in particular to just continue to serve your customers and invest and drive long-term value. You could argue there's never been a better time for a platform like Ramp, and I think it's a really, really interesting way for you to have completed it so successfully and think about the future. I think maybe just one thing I wanted to tug on a little bit is, you talked a little bit about, hey, really, really strong performance on the growth side, but also, just trying to be disciplined. And I would argue that that's been a pretty consistent philosophy that you've, certainly had over the years. Obviously, from we've talked about this way too many times, but, in 2021, there was a hyper-focus on growth, which shifted very quickly with the rate environment change and, things of that nature to, incredible focus on efficiency and profitability. I think part of the dialogue that potentially hasn't been as effectively captured is the spectrum. And encouraging companies to really think about what is the optimal balance between those two things, in order to optimize for long-term value creation, a little bit like what you were saying. I know you had some anecdotes as well that you've been thinking about and studying, but I'd love for you to share that, and also just tell us a little bit more about how you think about that balance for yourself.
It's a super good question. So I think there's a lot nested in the question, and I'll talk through a few concepts. So one, there's often this question we were asking, and it sort of perplexed us for a long time, which was, do you believe that you should grow faster or be more profitable? How do you think about this trade-off? And after thinking through it and talking through and trying to get perspective, our best conclusion right now, and the way I generally view things is, this is really a question of payback hurdles. Our view is we want to grow as fast as possible within a payback and return hurdle that we deem acceptable. I think what has changed over the course of the past years is the cost of a dollar quite simply has gone way up, but our desire to grow, I think is still very much strong. And so that hurdle has gone higher. I think the proof and the need to believe on putting any dollar of investment has gone higher. But we try to use this constraint-based framework. In some measures, we measure payback period. Others, it's lifetime value to cost of acquiring a customer. And so we've tuned those up. What are the return hurdles we need to meet? But our view, and what I say to the team, is if you have investments that you think are worth making, ideas that you think are going to create outsized value above it, this is the threshold. But if you're past it, we will fund it, and we believe in it, and this is what we're looking for. I think on this next question of sort of thinking through the dynamics of how our business is valued on near-term profitability versus long-term, I was preparing for this and looked at a chart last night, which to me said a lot. So one of our investors and advisors is Satya Nadella at Microsoft, and I looked at their stock, and today their stock price is about $330 per share as of last night. 10 years ago in 2013, it was about $30 per share. This is an extraordinary company. This is a 50-plus-year-old company. And it's not just for startups. This is for as late stage as in many ways as you can imagine. 90% plus of all of the value ascribed to this company was created in the past 10 years and in the last 10 years of their 50-year history, which is really telling you in many ways that growth, of course, matters. And being able to build something that really delivers an extraordinary amount of value, first just for one customer, and then for 10, and then for a lot, is really important. And I think even comes back to even a lot of our general philosophy on things of why do this in some ways seemingly counterintuitive financing. It's because we believe it increases our ability to go make investments that we think will first deliver tangible value back to customers, and allow us to create value faster and sort of increase the odds of that long-term value. I think the last thing about Ramp and what's worked is, look, our whole philosophy has been around alignment. We help companies spend less. If we do that, and the average company is able to cut their spend by 3.5% per year, we tend to grow faster. And I think it's helpful to sell a product that measures our own success by ROI, and with every conversation with a customer, we can show very clearly how we think this is truly one of the best values in business.
No, I think we've also been very positively surprised at how data-driven your organization is in general, right? And the concept of measuring every dollar that goes out the door to make sure that the ROI that supports that incremental investment is important. I think we as an industry obviously talk a lot about runway. And I do think it's a very important KPI for lots of companies, but perhaps more important is how do we think about capital allocation? What is the framework for driving incremental value with incremental dollars. And so I think you've captured that incredibly well. Maybe just shifting a little bit to the customer and to the product a little bit. I guess like the one thing that does stand out to me and to us is how much people love Ramp. And we've been fortunate to work with a lot of amazing software businesses and financial software businesses in particular. And it's hard to find people who love Ramp as much as they do anything else. And that shines through, and it's certainly indicative of our portfolio companies, many of whom are customers as well. I do think the one thing that does underpin some of the growing advocacy is your velocity of product. And I think the stat I heard was, over the last year and a half alone, you've shipped products in 4 new categories, 100 new features, or something like that. The magnitude of, that's if you do the math, that's the magnitude is incredible. At the same time, I do think what's made it so special is your unique ability to really understand the customer journey and anticipate the needs before they even have the needs, and ship products before then. And so I just love it's a broad question, but I'd love for you to share a little bit around what's made the magic in terms of product at Ramp.
You're making me blush. I'm trying, but look, we feel just frankly really fortunate to have this opportunity to build. And like I know some folks are here in the fintech industry. I think it's a fascinating industry to be building. Reality was, I think, zooming out, as the world changed and transformed, and you went from no phones to cell phones to flip phones to iPhones. The credit card never really changed. The bank account didn't have a whole lot of innovation, and financial services broadly was this industry that was largely off limits, and people assumed not much would evolve or get better over the course of some years. And so some of our, I think, good luck and fortune has just been the opening up of the financial services and fintech industry to upstarts and challengers like Ramp. I think has positioned us to be able to deliver surprise and delight where I think historically there was not. So, and look, I think there's other industries where that's true. I think this is true of healthcare. I think this is true of accounting. I think there's a lot of spaces that sort of thinking about, how can I approach a very staid and non-innovative industry and insert surprise and delight is exciting. Next, I think very early on, we were a bit of a different company, and there was some misunderstanding outside of it. I don't care how many credit cards we sell. I don't really count on like the number of bill payments made. The way we measure ourselves and our own success is how much money have we saved our customers? Have we made our customers more profitable, in some ways more financially efficient? And have we saved them time? And we started with these very different sort of questions of, really fundamentally based on measuring outcomes for customers. And so even prior to sort of setting our roadmap of what features are we going to ship, what products are we going to launch, the measurement was clear. It was, we're going to start with a customer. And as we started weighing and considering, okay, are we going to launch credit cards, expense management, bill payments, we started the question of, okay, are there places in your business you feel you're spending too much money or too much time? Let's talk about that. And we would follow customers home. We wanted to really understand their workflow, what it took to close their books, what they were spending money on, where they were spending maybe more than they ought to. And then all the features and things that we were building were prioritized really against that. So first, I think just that orientation of starting with the customer allowed us to be building things where we could have a bit more confidence about what we were launching, and we knew how we would measure it. I think the next piece of it around velocity is an interesting one. I tend to believe there's this funny adage of, if you want something done, give it to a busy person, and people kind of understand that in the context of an office. And like, I think there's something like that with product companies too, actually. If you are shipping quickly, you tend to ship not just more quickly, but often at higher quality because you are repeating the action, you're going through the act more often. And so early on, we observed, okay, this is a non-innovative industry, it doesn't ship often, we can surprise and delight people. We're aligned with the customer, let's ship often. And as we explicitly made velocity an early goal, and we think that is lent to quality. Last things that have helped, we still to this day have very small single-threaded teams that own the outcome. I think the worst thing you can do for velocity and for ownership is say, I know you used to make this decision and there were 6 of you deciding. Now there's 25. So go convince everyone, on spec, and you just sort of have decision alignment. So we have lots of small teams. There are trade-offs of doing that, but that has allowed us to kind of be this innovative company that is moving quickly. We have clear owners who have skin in the game, and we, at the end of the day, just try to help our customers.
Amazing. Maybe last question, just on the topic of product and new releases. Ramp Plus. Why should everyone in this room go run and adopt Ramp Plus?
Thanks for asking. So, look, first, so Ramp Plus, we built this really in partnership with some of our most scaled and demanding customers, whether it's customers like Shopify, Virgin Voyages, Sierra Nevada Beer, like kind of these larger companies. So this is really meant to companies as you're starting to get to more scale. A few key capabilities that we're focused on. First, more complex workflows. If you want approval chains, context of how you want to manage your own buying process within organizations, or as cards, bill payments, reimbursements, international money movement, and the like, this fits very well and expands the ability to issue to even 10,000 plus employees at once with credit cards while maintaining control. Next, we're expanding into procurement. Something that all Ramp customers benefit from today is price intelligence, and so people can see, across tens of billions of dollars of purchases per year, what things actually should cost, and so you can kind of cut your cost directly. This expands those capabilities into kind of the internal procure to pay and intake to pay process, and so it makes it really easy to have not just the ability to buy things, know what they should cost, but make sure that that process is simple. International support, so you can debit from international subsidiaries. You can launch cards in local currencies. It simplifies, especially for organizations with multiple entities. And so, I think really as organizations scale, this is a plus set of features that we think goes a really long way, all oriented around keeping control and saving time. But I think one thing that we did, around it back to just our view is first, we wanted to make sure the core product of Ramp stayed extraordinary. And so still you can use Ramp to replace your corporate card, expense management software, bill payment software with the highest rated software in the industry, and it's all free and it all pays you, which was super important to us. We added Plus on, and we actually upgraded all customers to it to give this complimentary for the next year. So first, just thank you to all Ramp customers who helped us get to where we are. We wanted to say thanks and deliver this. And for any folks who join, I think by Monday, you also can have this for a year for free. See if you like it. So we're very excited about it.
Amazing, as are we. Eric, thank you so much for this. It's been a pleasure to work with you directly as well, and thank you for sharing a little bit of insight into the Ramp journey. And I know the most exciting and the best days are ahead of the company.
Thanks, Yoonkee. I feel super lucky to call you my partner.